Hey, and welcome to the Silver Log. It is the 25th of May, 2011. It's approximately 10:40 a.m. Eastern Time. The market has broke further towards the upside and thus creating an intermediate term bull market. How long this will last for? Well, we'll just have to wait and see. It came up towards this Fibonacci level last night and found a little bit of resistance, pulled back, and there we go. A better chance of taking it out, and it did. Now the question is, will previous resistance become that of future support? And will it line up within this 5-day moving average somewhere? Now that we are within the rising 5-day moving average, all of the sell-offs become guilty until proven innocent. The likelihood that when it does reach the 5 that it will bounce is greater than 50%. The trendline analysis. Let's see what we got. The best one we got. Yeah, this one in here looks pretty good. I guess maybe I can do it better. Okay, so we have this as support. As far as resistance is concerned, there we go. So if we have any selling from this point, maybe we come back down to this trend line and a break towards the upside. And it's been facing the resistance field quite often. About 5, 6 hits in a row. This last candle hasn't touched the top part. And it's also a bullish candle. Whenever you have a situation where it's a big line with just this little top part like this, that's very bullish. It's already had a retracement within that hour, and it's not the closing 10 o'clock hour candle. However, if we do break above that trend line, then what I like to do is take the difference of the trend, and thus, where do I think we're going to go up to? I think we're going to go up to this top of this trend line. Now, if you want to know where it is, I suggest you do the calculations because it's obviously above 38. And the big level that I'm going to be talking about is going to be that of 39. That's a huge, huge level. I talked earlier back in here when it originally came down to 39. The reason why it was such a massive level of support and why it should have bounced and it didn't. Rather, it was that of resistance, and the same reasons for why it was support before are the same reasons for why it would be resistance today. The 5-day moving or the 50-day moving average was there before. It's flat, so it's still there. All the Fibonacci levels, and I mentioned 3, those Fibonacci levels have not changed. And before we get there, then there's this Fibonacci level here, roughly at around 38 and change. That is the 38.2% exponential Fibonacci from this high and this low. But again, I think this whole area within 39 is going to be an area where you find resistance. What will be important? Finding resistance is fine on a bullish case, but it's holding this previous resistance level. If it can successfully do that, then it gives you the chances of maintaining like a situation where you come up towards here, come back down, and when you do that, you have a better chance of breaking those levels out. And that area would be roughly around $36 per ounce. As far as trend lines are concerned, it's all about creating them. It's wherever the market tops is where this trend line is going to eventually top. Now, I did draw one earlier that was somewhere in this area here. Doesn't look like it was resistance, obviously. Yep, it would have been this, and you can see wasn't really any resistance whatsoever. This lighter blue line, this is the running average from the time when the market crashed, and it's not really doing so much either. But the 50-day and the 39 is a pretty large area. We'll see when it gets towards that level what the resistance will be. And I think we will probably go up to that level with only the little bits of corrections here and there. As far as the volatility is concerned, the blue line represents the average moves over the last 2 days on an hourly basis, and the orange line over the last 5 days on an hourly basis. And I was mentioning about this double top formation, and well, it was the 2% move to 1, so based on losing half from 2 to 1, that would take us to 0.5. Maybe it's doing what these double tops are supposed to do. However, the volatility is back to where it was pretty much used to before we had all these wild movements. And when you have these lower moves, that usually means up moves to sideways action. We are seeing that currently. And this bar has been set. Don't be surprised if this level does get surpassed. Finally, we'll finish this off within the daily chart. The volume on the top of the screen represents the SLV volume and the price action for the silver COMEX. So an uptrend has been switched off to that of a downtrend within the volume, and it may take a while to revisit this. After all, when we had this move, we had the reduction of volume, and it took months before it was able to surpass the previous bar that it had set. Now this bar here is 300 million, and obviously this is all fraudulent in the sense that there's not enough silver in the world to justify this to be the case, but what is what is, and that's what is. The Fibonacci support level here is from this high and the breakout lows. It's weighted on an exponential level. This blue line is the volume weighted average price since the August breakout, and these areas have found great support. It's now broken past this resistance. It's still got a long ways to go to just get back what has been lost in here, but it's at least on the right path. And this big level again is going to be this 39. And I've said this before, I'll say it again. Whenever you dip through a significant area, that's where you would find a turning point, and going below the 50-day moving average is one of them. And then you don't find resistance and break down where you're supposed to, or I don't know if you're supposed to, but if you don't break down, then that becomes that of a failed move. And we're looking at a similar sort of pattern here. Now, we still haven't got up to this level, and it could do just that. Find resistance here, because if we find resistance and come back down to here, then that really increases the chances of breaking it out. If we find resistance at the 50 and come back to that level of support of around 36 that I'm talking about, and then make it higher, then that's totally fine. And even finding support at, like, say, 37, if we go up to this area here, maybe we find support up towards this level here, come back down, and then break that level out. That's very normal. However, if this 50-day moving average is not used as resistance, and thus not put into either a bear market or neutral market, then this would be that of a failed move. And oftentimes for failed moves can create fast moves. And it seems within theory, the bigger the failure, the bigger the fast move. Therefore, this would be a much bigger failed move here than here. Thus, the fast move that would follow should be faster than happened in here. Thank you for watching this video, and have yourself a great day. Bye-bye.